Hi, everyone. Welcome to this week's episode of Global Money News Review. My name is Ola. I'm the founder of the Money Weight Club. I'm a financial wellness company. And basically, what we do is that we help put their financial. So these sessions are designed for you to know about what's happening in the economy globally in Nigeria and then in Africa, and then know how it affects your pockets and know what you should be doing. Or just get more informed or just understand what is happening better. Like come out from under that money rock that you are under. Come out from that money rock that you are under, right? So yes, we're starting this week with some interesting news. The first thing I want to highlight for this week, I mean, if it's your first time joining, of course you know you should subscribe to our channel. This happens every week, Saturdays, GMT plus 9 a.m. So yes, this week we're going to focus on some things that are quite interesting. The first one is about Hurricane Milton that happened in America, Florida for Florida to be precise, and how it puts a spotlight on something called the catastrophe bond. Now, I'm sure you'd have seen it in the news and you're like, what is all this noise about? So let me explain. That's my work, to explain all these money things in simple English. So what's the catastrophe bond? Basically, it's a bond that's issued by insurance companies. So you know that, okay, so if there's some kind of natural disaster and maybe your house gets destroyed and you pay for insurance to cover natural disasters, the insurance company is obligated to pay you. Right. Now, insurance companies in trying to mitigate that risk, i.e., if a natural disaster occurs and I have to pay these people out, where am I going to get this money from? Is it going to throw me into a loss position as a company? Is it going to throw me out entirely, wipe out my capital, depending on the amount of the loss? Things like that. So insurance companies now decided that let's do something creative and let us issue a catastrophe bond. Now, what is a catastrophe bond? A catastrophe bond is basically, first of all, it's a bond, meaning that I take your money, I borrow your money for X number of years. Generally, catastrophe bonds are for like 3 to 5 years. So I borrow your money for like 3 to 5 years. I pay you interest that is higher than what you would ordinarily get for a 5 year bond, right? And in exchange, if a catastrophe happens that meets a certain criteria, so not just that there was a hurricane, no. So they will say a hurricane that meets maybe hurricane level 7 or level 5, and this happens, or blah 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 blah. Or if there is a tsunami, something specific, they will define what the catastrophe is, so that it's clear to everyone. But if that catastrophe happens in the 5 years, right? And let's say the total bond I borrowed is 100 million and $100 million or $1 billion, and the payout, for example, is $5 billion, you lose your 1 billion, right? So what they objectively say is that they like if the payout exceeds, so let's say if the payout exceeds a certain amount, then they would draw on the catastrophe bond. So if, for example, the payout was 5 billion, right, and catastrophe bond was, and so they're supposed to pay out 5 billion, and the benchmark is that if the payout exceeds 1 billion, we will draw on the catastrophe bond. It means that the investors in those bonds will, their money has gone. Their money has gone. They'll just use your capital, that money you dropped that they kept somewhere. They just carry it and use it to pay people out. What does it do for them? It reduces their risk. It reduces their risk not significant, depending on the amount of the destruction, really, but it reduces the risk on the insurance companies. And then because the criteria they set for this, the criteria they set for these things are usually very steep and they ever happen. For the investor, it's almost like it's risky, yeah, because the returns are generally higher, but then it's one of those freak events that hardly ever happens. So now what's happening here is that Hurricane Milton is one of those freak events that hardly ever happen, right? And so there's a catastrophe bond that was issued on the back of it, on the back of that criteria, and so it has been triggered. Now, what's going to happen? The people that invest in that catastrophe bond are going to lose their money, right? On one side. But what it also does is that insurance companies, because of the value that they have seen in the catastrophe bond, they are more likely. But then, from an investor perspective, if you got burnt, you would slow down in investing. So, what for bonds market in terms of what to invest in, right? It is good because, I mean, the insurance companies have benefited here. But from the perspective of the investor, I would say high return is a reward for high risk. And the return, like the return generally is around 6.5%, which if an African debt investor, you'd be like, why would I take such a risk for such a low return? But from the perspective of someone in the United States, that is a very high return, right? Because I mean, a 10-year bond, they're shouting is high, 4%, 5%, right? So if somebody gives you a 5-year or 3 to 5 year bond for 6%, it's a gamble that a lot of people would consider. So don't think, what were they thinking? No, it made sense at that point. But obviously, the risk crystallized. And so there's nothing anybody can do. So, yes, hi, Business Online. Nice to see you. I see people. Please say hi. Please say hi. Just let me know who's listening in. And all. And also to announce that I'm starting my weekly education content on YouTube. So, what money questions would you like me to answer? Especially because a lot of things are happening globally, in Africa and also in Nigeria. So, if you have any money questions that you like answered, and if you haven't even gone to binge watch on my past content, please do. There's a lot of education there that will just answer little questions here and there about finance and make you wiser by the day. Now, on to Africa news. What's happening in Africa? The first news out of Africa, and this one is like something that we see a lot generally, where the World Bank will just say they are cutting their growth forecast, or they are increasing their growth forecast, and you're like, oh, your forecast is not a forecast. Then it's just a forecast, number one. And then two, you now come later and revise it, because I mean, the news that I'm even highlighting is that they are revising their growth forecast. But for a non-finance, non-economist type person, the question is, what does this mean for you? Now, why, first of all, is this important? Because as much as we think that life is just happening, especially when you are experiencing your own experience and you think you're the only one in the world, like if you pull back over the years, you actually realize that there's nothing new under the sun. You actually realize that the markets go in trends, and that you can actually, if you see some data points, you can actually use those data points to sort of predict what is going to happen. Now, why is that important? Because your ability to predict what is going to happen will help you to hide yourself if a wind is about to blow, or to position yourself if money is about to fall from heaven, if you get what I mean. Now, why am I saying that? Because the World Bank has PhD holders, research people, research experts, blah, 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 blah. And then they intermittently come and not that they intermittently, they follow. So you have someone who actually sits down, and what they study is sub-Saharan Africa economic data points, that kind of thing. And they're the ones dishing out these reports. They are human, so they can't predict everything. However, based on data, they can predict some things. They can say, okay, this is probably what's going to happen, right? Now, those people are paid to just sit down and be studying the number points and predicting stuff. Now, when they come out with these reports, why is it important? First of all, because it's the World Bank. Everybody listens to the World Bank. Just know that. Everybody just listens to the World Bank. So you should also listen. Why should you listen? Because you're seeing everybody in a certain direction, and you are a leader, end up jamming. That's the first. And the second thing also is that because everybody listens to World Bank, you can almost think of World Bank as an influencer, right? So if the World Bank is saying that things are generally going to go in this direction, or the World Bank says that this country's economy looks good or is positioned for this X number of growth, and these are the sectors that will do. Do you know what happens? People reading those reports, if they decide, if I'm an investor or I'm a business person in Europe, and I'm saying, what is the next market to go to in sub-Saharan Africa? Africa is the next frontier. You see those reports, that's what they use to make decisions. Such that for you as a lay person, I'm not telling you to go and read those reports, because they're actually usually very intense and very heavy and very, and I understand that. But what I'm saying is that you see those summaries, just read them and have an idea of where the trend, where they are pushing everyone to, sort of, in quotes, of quotes, and what countries they think are the highlights, what, just those little things. Why? Because when you are making your business expansion decisions, when you're making your investment decisions, right, those are the things that you should be considering. Somebody has done the work for you. It's just for you to pay. The next time you see those news like the World Bank cuts rate, the World Bank cuts inflation expectation, or increases inflation expectation, or increases growth expectations. Now, what is growth expectation? Meaning, in case you don't know, I just realized that I assume that people actually understand, but they're saying that economic activity is going to increase in these places. That's what growth means. That is actually what it is. Economic activity means buying and selling. So if you are looking for where to plug into, yeah, plug into that place. Hi, Imelda. Yeah, so I mean, if you're looking for where to plug into as an investor, because I get that question a lot. A lot of people just feel like there's nowhere to invest. I have money, I don't know where to invest, right? But it's almost like you're looking for a shiny object, but it really investing, I always say, is like planting a seed, right? When you plant it, it looks like nothing is happening until when it now blossoms and grows and it starts fruiting and stuff, and then everybody's like, oh wow, you have a tree, blah blah blah. But yeah, when you started the journey, it looked like nothing was happening. So if you want to start investing off on the shiny objects P, it is probably too late. You get, the tree is already shining, right? So the way you find those investments at the good pricing and in good timing is just listening or putting an ear out for some of these things, because they give pointers on where to go, especially if you're a business person looking to expand, especially if you're someone that is looking for global, like business work mobility, meaning that what country should I be going to? I do this thing, that offer this service, I have this kind of profile, I can do this kind of job, blah blah blah. Right, so that's how you think about it. Now, while we are at it, if you haven't already, please sign up to a free newsletter. um and you learn more about money. You also know what's happening in the Money with Club, because we just do spotlights of what we're doing, just to keep you abreast. And of course, if you have any questions around that, you can always respond around what we type or what we share, and can always send us an email and all. Now, for second African news, we need to run now because it's always 15 minutes. Second African news, Kenya is trying to end bank dominance in the bond market. Now, this one, when I saw the headline, I was like, this first thought was, why are you trying to stop banks from buying bonds? Like, they're your key buyers, right? But when I read the news, I mean, I guess that's what it was supposed to get our attention. It's more like they're trying to diversify their investor base, right? And in fairness, right, globally or in developed markets, the major, even in developed markets, even in Nigeria, right? I think, yeah, the pension funds, the asset managers' pension funds are major buyers of bonds, and it gives more stability to the bond market. But if you have, what is their problem? Their problem is that banks are demanding more and more. But I don't know who told them that pension funds and asset managers will not be demanding more and more in terms of rate. They want higher rates. But I mean, even pension funds will be harassing you for rates. I don't know why you think a bank will not, or a pension fund will not, because they're like, everybody's looking for money. However, what they are really saying is that they want to have a broader base of investors, and that is good. Why? Because banks are somewhat seen as traders, up and down. They need liquidity, they sell, they're just turning their portfolios over. But a pension fund they just buy and they hold. So the more you have pension funds invested in bonds, the more stable that bond will be, the less liquid it will be. So the price will be good for the real time, or the real for the individual investor that wants to go into the market, right? It brings more stability to the market. Banks, you just see them as traders in and out, right? And I think it's a good one. I'm looking out for the initiatives that they will put in place. For example, in Nigeria, there's regulation around pension funds and the amounts that you should have in government securities. That is one anchor. And those are the kind of tools that you use to bring some stability to your bond market, right? And consistent demand also. So yes, big ups to Kenya on this. I'm waiting to see the policies that they will bring out to support it, because that's where policies come from. Yeah, we're waiting to see that. And then now to Nigeria. We have 1 more minute. FG rejects Shell 1.3 billion oil asset sale to Renaissance Group. Now, backstory was that earlier in the year, I think like February, there was an announcement that Shell was divesting from its onshore assets in Nigeria, and that they were selling to a consortium of oil companies called Renaissance Group. Now, of course, because the oil industry in Nigeria is like the bread and butter, it's highly regulated. Everything was passed through some governments. Of course, such a major sale needs to be approved, right? But then it has been rejected. Why are they saying that? They're saying that the companies have not shown enough capacity to use those assets. To use the assets they currently have. So why are they adding 15 more oil assets to their portfolio, right? And it's neither here nor there, because one of the reasons why Shell is struggling is because there's a lot of challenges with the onshore assets in Nigeria, majorly security challenges, right? And those things have not been resolved. So is it possible that these people are also struggling because of the same issues? Yeah, but this is where we are now from an investor perspective, right? This is where regulation, like they always say, after God is government in any standard organization, institution, blah blah blah, nation, sovereign entity, right? Because now they thought they had a deal, everybody has celebrated, they started making plans, they started doing all sorts of things, and then you just come, bam. But this is really major, because for Shell, they are in quote unquote stock, because they want to divest. They've made a policy decision to exit the country, and the government is blocking it when they have buyers, right? Um, what does it say to other people that want to come in that space? You can be stuck because I can imagine as a company saying that I want to exit a place and I find a buyer, and then the government is saying you can't buy, you can't leave, right? And then is apart from like, okay, the capacity, blah blah blah, they're now talking about lobbying, people that are lobbying and all that, and interest groups and stuff, right? It's whilst it's good on one side, but in the long term, we are like, okay, if you want to get a fresh investor into this space, the person needs to know how they can exit if they choose to. So it's one of those things that are like quite confusing from an investor perspective, because if you as an investor were listening in and we're watching and saying, oh, come into the oil and gas space, they're like, okay, if I decide to exit, is it possible that I will not be able to? And that's another thing, and it's quite valid. But from the Renaissance group, I can just imagine the loss in this whole process, because lawyer will collect their money, investment bank will collect their money, all the interest groups they've tried to manage, all those things, right? There would have been so much time, so much resources put into this. And is it possible that they might change their minds? Yes, they probably would have to tick a couple of those boxes and do a lot of lobbying, right, before they can get to this point again. But that just sounds very heavy from here, because I can imagine what it took to get to that point. But anyways, this is what it is. This is life, right? This is investing. This is not being able to predict the next thing, right? And this is me saying that you should subscribe to our channel, so you get you actually, like, beyond just knowing the news or hearing it, actually being able to understand. And I mean, if you see some news and you're like, what does this thing really mean? Like, you always hear it. Yeah, drop it in the comments. Let's talk about it. I'm happy to discuss, because I mean, it's just 15 minutes. So I have to choose what to talk about and all that. I thank you. Thank you to everyone. I can see a lot of people are online today. And also to remind everyone that I'll be resuming my education content on YouTube. What money questions would you like me to answer? Please drop in the comments, and have a beautiful week ahead. Bye.